So, how's it going, guys?
It's going great.
Thank you for inviting me over to the house. Appreciate you guys having me over. So, how long have you guys been together?
Going on about 3 years.
3 years now.
Cool. Okay. All right. So, did you guys just buy the house or refinance? What happened there with that?
We just bought it.
Okay. Cool. So, you guys have on the paperwork here, it looks like you owe $125,000 on the loan.
Correct.
Yep.
Is that right? Okay. All right, so I'm gonna fill out one of these forms. It's called a needs analysis, and I'm just basically gonna go over this with you guys. So, 125,000. Got it. Okay. So, and you guys have kids?
Yes, we've got 2.
Cool. Okay. How old are they?
They're 5 and 7.
Nice. Okay. Yeah, I have let's see. Wow, he's 13. I have a 9-year-old and a 6-year-old. So, what school do they go to?
Indian River.
Nice. Okay. Yeah, my kids go to Cape. So, I guess they'll be competing against each other when they get in high school, right?
Yeah, pretty close.
Yeah. Cool. Okay. So, with you guys having this loan for 125,000, most people that send this form in, they're looking for something that's going to pay the loan off, you know, in case something happens. And I know you guys probably got a lot of these things in the mail. Did you get a bunch?
Quite,
Okay.
yeah, a couple
How many
years.
did you fill out?
Probably about 2 or 3.
2 or 3. Okay. Okay. So the one that I got is actually right here. So is that your handwriting, Kelsey?
Yeah, yep,
Okay.
looks like mine.
Perfect. Okay. So most people that send this in, they're looking for something that's going to pay the mortgage off in case of death. It also has critical illness. What's something that's on this paperwork that like really attracted you guys to sending this form in?
Obviously the death benefit payout, but definitely the critical and the terminal illnesses as well, since we're so young.
Right. Okay. Okay. Perfect. All right. So, and you guys said you have 2 kids. They're 5 and 7.
Correct.
Yeah.
Perfect. Okay. Got it. So, what do you do for work?
I'm a truck driver now.
Nice. Okay. So, are you on the road a lot?
For the most part, it depends on the week.
Got it. And what about you?
I'm a teacher's aide.
Nice. Okay. Cool. Are you in the Indian River School District?
Shelbyville Middle, but
Oh.
yes, Indian River.
Okay. Yeah. Nice. Got it. Okay. So, do you guys have any trips planned? Like, you guys going on vacation? Anything cool like that happening?
Maybe a trip out to see your parents or dad.
Yeah, but other than that, nothing really big.
Where's that?
Out in Wisconsin.
Oh, nice. Okay. I've actually never been to Wisconsin.
Cheese and beer, and
Yeah.
that's about all there is out there.
Nice. Okay. Cool. So you're a beer guy?
Yeah.
Nice. Okay. I have a couple beers every once in a while too. So, what's your favorite type of beer?
Sours.
Oh, sours. Okay. I've had a couple sours, but okay. Where's a cool place around here that's got some cool sours?
Well, there's
Sours.
Dogfish up in Milton, but they're overrated.
Oh, yeah.
Otherwise, Tall Tales down in Parsonsburg.
Okay. So my parents actually live in Parsonsburg.
Oh, really?
Yes, yeah. My dad, he's got 6 acres. They just finished building the house, and he recently just got a policy on himself, and so did my mom. You know, so because in case something that obviously happens to my dad, we didn't get something to pay the whole mortgage off. We just got $50,000. But in that scenario, it's still going to buy my mom time. So mortgage protection doesn't always mean to pay off the loan. I mean, you guys are in your 40s, right? So typically we could look at something that's going to pay the whole loan off, but it's not always recommended. So we don't have to get something to pay the whole loan off. In most cases we can. But my job today is to find out what I can get you approved for, but also with our product, you don't have to go through a medical exam. Okay, so on here. So no medical exam, guys. So which is actually really cool. But so they don't send a nurse out to poke you in the arm and like get you on a scale, see how tall you are, how wide you are, right? But they do check prescription history. So it is a policy. It's not accidental death only. It's going to pay out in the event of death or critical illness if you qualify for the critical illness. So we'll get into that here in a little bit. But as far as no medical exam, they do check prescription history. So I'm going to ask you guys some questions. I don't want to, you guys think I sound nosy, but my job is to get you approved and send in the request for approval. That's all we're doing today, okay? So with the prescription history, I'm gonna ask you some questions about whatever you're on currently and what you've been on in the past, okay? Also, they check the MIB, which stands for Medical Information Bureau, Logan. Have you ever heard of that?
No.
Okay. So it's actually kind of like a database that all insurance companies report to. So if you ever got diagnosed with cancer or something like that, it's going to show up there.
Okay.
All right. And then they're also going to check, I'm going to do my field underwriting, which I'm going to be doing here in a minute. So we match all three of these up. Oh, they also pull a driving record. So you guys aren't out there ripping and running, doing any
Wouldn't have a job
donuts.
doing this. I did.
Yeah, right. You're a truck driver, right? Yeah. So never had a DUI, anything like that? All right, perfect. Any reckless driving tickets? Okay, perfect. So that's clean. Okay. All right. And so if all three of these match up to what's on the application and that we send in today, then the policy gets approved. Some of our companies actually, we can find out if you're approved on the spot, which is actually pretty cool. So I could possibly leave here with you guys knowing that you actually have coverage. Does that make sense?
Yeah.
Yeah, okay. So most people are looking for coverage where it's going to pay in the event of death. You guys sent this form in because you're worried in case something happens to Logan, like if Logan gets hit by a bus tomorrow, God forbid, that you're okay, right?
Definitely.
Yeah,
Especially
okay.
being on the road so much.
Yeah, he's on the road a lot. Okay. Do you guys have any questions before I go to the next?
No, I don't think so. No, pretty
Okay.
simple.
So most people, like for you guys want to protect your family, right? You guys have 2 kids. So this looks exactly like you guys. That's Logan, that's you, and your 2 kids. Cool. They also want to protect the home equity. So with you guys only owing $125,000 on this house is awesome. How much do you think it would sell for?
The way the area is growing right now, we could probably get 200 for it.
200,000. Sweet. So you guys have about 75,000 of equity.
Yeah, I would say so.
That is awesome. So if we can't cover the whole mortgage today, then obviously we want to protect that equity, because if something happens to Logan tomorrow and you only have your salary, we want to make sure that after 6 months of you struggling to pay the bills, that equity doesn't go back to the bank, that it stays with you. So we could possibly put something in place that's going to pay 3 or 4 years of mortgage payments like we did with my dad. But we'll get into that later, okay? So what do you guys pay monthly for the mortgage payment?
Oh, it's an 80,000 actually.
Okay, a cool 1,000, sweet. All right, so we got Logan, Kelsey, and what are your kids' names?
Charles and Charlotte.
Charles and Charlotte. All right. Cool. And your kids, are they, when were they born? What's their birthdays?
5/18,
Okay, and
2/10.
210. Cool, okay. All right, the reason I asked that is because, have you guys ever thought about getting coverage on your kids?
We don't have anything. You know, you hear about Gerber. They actually send us some things in the mail, but we haven't done anything.
Okay. So, I have 3 kids, and I have policies in all of them where obviously nothing's going to happen to them, right? Let's knock on wood together, right? Nothing's going to happen to our kids, right? But you get insurance on your kids early because with one of our insurance carriers, they can actually increase their coverage 5 times in their lifetime without proven insurability, which is actually pretty cool. So if they do get sick later in life and they become uninsurable, then we can actually, call the insurance company and increase it with different milestones in their life. It's based on age, or if they get married or have a child, stuff like that, which is pretty cool. Okay, so I'll go over that with you as well. So Logan, on here it shows your birthday is 10/10/77. Is that right?
That is correct.
Okay, perfect. So you are a cool 44. All right. And you said you guys been married or been together 3 years?
Yes.
Okay, cool. Where'd you guys get married at?
Actually, out of Trap Pond. A
Okay.
small thing,
Yeah, nice, awesome. And that was how long ago?
2 years.
Almost two.
Okay, cool. So you guys dated just for a year, and then you got married. Sweet, okay. So my wife and I, we actually met in 8th grade, which is actually pretty cool. But then we lost contact for about 7 years. We went to different high schools, because there's 3 high schools in our
Yeah.
area, right? And we went to different high schools, and then when I saw her when we were in our early 20s, it was actually at a concert. She walked up to me, and she's like, are you Matt Gibbons? And I was like, yeah. Are you Tamara? And I was like, wow. And she was like, yeah. And she was like, yeah, you grew up too. And I was like, yeah. And it was fireworks, everything was going on. And so we've actually, been married 10 years. We've been together 15, 3 beautiful kids. So, marriage can be tough sometimes, right? But it takes effort and work. So, how are you guys, like, with having the 2 kids and being married and working, like, how's that, like, you guys?
Everything's pretty good. It's just with his job, of course, he's just not home very much.
Yeah.
So
So when he is home, you want to spend time with the family, right?
definitely.
Right, okay. So, all right. So the next, I really like to find out if this makes sense, because sometimes when people send these forms in, it doesn't make sense, okay, to get anything, which is rare. Most times it does make sense to get something, right? So Logan, do you have any current life insurance that's not through work? I don't count work insurance, because work insurance is like a ketchup bottle at a restaurant, right? It's really cool while you're there, but you can't take it with you in most cases. Very rare cases you can actually take it with you, okay? So what kind of life insurance do you have that's not through work?
There was a $50,000 policy with Primerica, I think it was who it was.
Is that right, Kelsey? Because my wife takes care of a lot of the stuff too.
Yeah,
like-
she takes care of pretty much. I just drive a truck.
Okay. So I need to confirm that with the wife. Is it 50,000?
Yes.
Okay.
50,000. I see them take out every month.
Okay. 50,000. When did you get that policy?
Oh,
That's been maybe 5 years or so.
5 years ago? Okay. So we got that 5 years ago. Got it. And what are you paying a month for that?
It's 40.
$40? Okay. $40 for 50 grand? Okay. And you got it 5 years ago?
Mhm.
Got it. Cool. Okay. All right. And then what about you, Kelsey? Do you have any coverage?
I do not.
Okay. So, no coverage there. So, all right. And 50,000, so God forbid something happens to Logan tomorrow, you're only getting 50 grand. And that's enough to maybe take you through, what, a year's salary? Like, what would you say ballpark is your monthly net income?
for me, 5,000.
5, okay. That's pretty solid. Sweet. Okay. And you pay only $1,000 for the mortgage? Okay. And Kelsey, what is your income after taxes? So I don't need to know, and that's after taxes?
Yes.
Okay, so before taxes is around 6-7 grand? Got it, okay. And what's yours, Kelsey, your net after taxes?
It's about 2,000.
Okay, got it. So between the both of you, it's about 7?
Yeah.
Okay.
Sounds about right.
Still not enough.
Yeah, I know, with 2 kids and.
Not
yeah,
today's
right,
day and age.
yeah. They probably have like the latest and greatest tablets and, yeah.
It works.
Yeah,
No,
it works.
she spoils them too much.
Oh, yeah?
Sometimes.
Yeah, I mean, that's okay. All right. So, 50,000. So, I mean, just quick math. If I just take 5 grand and times that by 12, that's 60,000. So you don't really have you only have like less than a year's salary. So most people with life insurance, they have somewhere in the ballpark of 5 to 10 times their actual salary. Okay, so I do see why you guys sent this form in. You're in big trouble if something happens to Logan.
Yeah, I would say.
Yeah. what would be your plan? If God forbid he passed away tomorrow, and you got this, you got 2 kids, you got the mortgage, you know, you're making $2,000, the mortgage is $1,000, you're left with $1,000. What's your plan if something happens to Logan?
I would probably have to move, probably sell the house and move. Maybe do something smaller or something I can afford better, or pick up a second job.
Okay. Well, I mean, you've just lost your husband, you got 2 kids, you're probably not gonna pick up a second job.
It's gonna be hard.
Yeah. So you can see that, I mean, it makes sense to get something today. Can you both agree? Like,
Yeah,
I mean, you guys would be, and so my job is to really find out what I can qualify you for, because I work with about 20 different insurance companies. These are some of the top 15 that we work with. Forrester's Financial, Mutual of Omaha, Americo, Transamerica, Columbia, Aetna, Government Personal Mutual, you know, AIG, John Hancock, any of those insurance carriers, have you ever heard of any of them?
Yeah, that's CVS, like the pharmacy, right?
Yeah.
Okay.
So they partner with Aetna, which is pretty cool. So,
And Gerber, of course.
yeah, Gerber, yeah, exactly. So, any other companies that kind of stick out?
Like the old Mutual Omaha commercials that used to be on TV.
Yeah. So I'm a broker. I can kind of shop around, find the best option for you guys. So like I said, I need to find out what you can qualify first. Some insurance carriers are better with blood pressure or tobacco use or diabetes, asthma. So I need to really find out what I can qualify you guys for, if that makes sense,
Yeah.
and then go from there. So Logan, any tobacco use for you?
Yeah, I dip. She hates it.
You dip, okay. Got it. I got a funny story about that actually. So I actually used to dip in college, like just social dipping, and like like having a beer, right? You wanna, having a beer, right? And that was kind of the time where I met my, wife, and she was like, I will not kiss you if you continue to dip. I quit that next day. Like, it was a no-brainer. So, no pressure.
She doesn't follow through.
Yeah.
I'm just gonna have to cut him off then, I guess.
Yeah. No, don't do that. Don't do that. Don't do that. So, Logan, what would you say ballpark is your height and weight?
About 6'1", 230, 235.
230. Okay. 235.
230, 235.
Okay.
How
And
much he eats.
Depends on breakfast.
you're a good cook.
Good cook.
Good. Yeah. Good. Yeah, my wife can cook too. She actually went to school. She went to Le Cordon Bleu culinary school.
Oh.
Yeah. So, but she was already a good cook before that. So. All right. What about you, Kelsey?
No tobacco.
No tobacco. Okay. Have you ever, in the past?
Never, ever.
No? Okay. Some carriers go back 2 years, some do a year, okay? So with you doing the dip tobacco, most cases it's gonna be a tobacco rate. But I'll see what I can do. If you qualify for one of our products, we actually might be able to get you the non-tobacco rate with one of our carriers, because they only classify tobacco as vaping, or cigarette use. So if you vape, if you're cigar, dip, we can actually get you the non-tobacco rate, okay? Which is it's gonna save you a ton of money. Because with you paying $40 for 50,000, and you got that 5 years ago, and you're only 40, that's probably a tobacco rate, right?
Yeah.
Okay. Got it. All right. So let's get into this. Oh yeah, Kelsey, what's your height and weight?
I'm about 5'6" and 130 pounds.
130, okay, got it. All right, so as far as like prescriptions, I need to find out about that, but also, we'll start with you, Logan. Have you ever had a heart attack or stroke or cancer?
I haven't had any heart attacks, no stroke. I'll give it 10 years. I'll probably have cancer.
Yeah. Does that, because of the tobacco use?
Oh,
Yeah. So that's more reason to quit, man. You got 2 kids. Yeah, does that run in your family, cancer?
On my Mom's side, yeah.
Yeah, but you have never had cancer?
No, I haven't.
Okay. Do you have any issues like where you have to use an inhaler?
No.
Okay. So are you guys, just so I can verify the dosages, are you guys able to go grab your medications?
Yeah.
Okay,
I've got it
perfect.
actually right here.
Perfect, okay. So Logan, all right, looks like you're on, these are yours, right, Logan?
Yeah,
Okay,
those
so
are mine.
you're on lisinopril. That's for blood pressure, right?
Yep.
Okay. What's your blood pressure normally run? Is it pretty,
145 over like 90, they said, 90, 92.
okay, so
It's getting up there.
tad high, okay. But what was his last blood pressure reading, Kelsey? Do you remember?
It was like 130 over 85.
Okay. So you check it at home?
Yeah, we do.
Cool.
Well, she's
So how long have you been on the blood pressure meds?
That's something.
4 or 5 years.
All right, so
2017.
got it. And it looks like you're on cholesterol, atorvastatin, 40 milligrams. That's once a day, right?
Yeah.
Got it. And, all right, metformin, got it. Have you ever been on insulin?
Haven't been on insulin.
All right, so metformin, how long have you had diabetes?
I was diagnosed with it in 2017.
Okay, so
It all
everything
came at
kind of
once.
happened?
Yeah.
Got
Yeah, it
it.
was like a freight train.
You finally went to the doctor, huh?
Yeah.
Got it.
First time in 10 years.
Okay. And then, hey, I'm glad you went, right? Because that was like right around the time when your kids were born, so good call. All right, so, all right, with diabetes, they check A1C. So I'm sure you guys understand that. Like, what was your last A1C?
You'd have to ask her about that. I don't keep track of this.
Last time they checked, it was like a 7.1.
Beautiful. So you're taking care of yourself. Good job.
She's taking care of me.
So it's pretty much well controlled with
I mean,
the,
I cook, so it's diet control.
yeah, diet control. Okay, got it. Perfect. Any other medications, like any recent surgeries that you've had to have, like pain meds?
No, nothing else.
Perfect. All right. So we're looking at blood pressure, cholesterol, diabetes. That's it?
Yep.
Okay, cool. And everything's well controlled, so actually, great news, I can actually qualify you for a policy that we can look at covering the whole mortgage, which is actually pretty cool. So you are insurable, right? And then what about you, Kelsey? I mean, because sometimes, obviously he makes $5,000 and you make $2,000. If something happens to you, what's gonna happen to that $2,000?
It'll go away.
Right? And if something happens to the $5,000, what's gonna happen to his income?
It's gonna go away.
If he passed away.
It'll go away.
Okay. So we could look at getting something that covers the whole mortgage on you too, because you got the 2 kids, right? You also have to have childcare if something happens to her, and you're probably just gonna be staring at a wall for a couple months. So you might take some time off work.
Well, I won't be able to be on the road anymore.
Yeah.
If she's gone.
So in some cases, we look at getting 50,000, 100,000, or we could look at something that covers the whole mortgage too, so you don't have to worry about that. Okay? Does that make sense?
Yeah.
Okay. So what, looks like you're on Lexapro?
Yeah.
And that's for, do you take that for anxiety?
Yeah, mild anxiety.
Okay. And how long have you been on that?
That's been about since 2019.
Okay, since you guys been married?
Yeah.
Yeah.
It's actually like a month after we got together.
Okay.
She's like, okay, he's too much.
No problem. And looks like levothyroxine. Okay, so you have hypothyroidism probably?
Yes.
Okay. And 35 mg. Okay. All right. And how long have you had that?
That's actually about the same time he was diagnosed with the diabetes, about 2017.
Okay. Perfect. All right. So have you ever had a heart attack, stroke, cancer?
No, nothing else.
Okay. So you're in pretty good shape. Awesome. All right. So the one company, because you have 2 kids, actually, this is actually who I have my insurance with, is Foresters Financial. I like them because they offer member benefits and living benefits. So member benefits are like, here, I'll show you guys this here. So this is how Foresters works with their member benefits. All right. So with you guys having kids, they can actually apply for scholarships, which is pretty cool, up to $8,000 max per child. God forbid something happens to both you guys. You're driving in a car and you guys are going, to the grocery store on a Sunday or something, and somebody's watching your kids, and you both, God forbid, pass away, right? Whoever's going to take care of your kids would get $900 a month per child until they turn 18.
Oh, wow.
So that's $1,800 going to, do you guys have a will?
No, actually,
No.
we've been talking about needing to make one.
Okay. That's another thing that's included in this policy. Law assured, okay? So you can actually put together a will for free. It's included in the policy, okay? Which is actually pretty cool.
Yeah, it's like
All right.
$600 to make one.
Yeah,
That's why we haven't done it yet.
yep, exactly. And you don't really know what to do, right? You gotta
Yeah.
contact a lawyer, So a lot of different benefits with foresters. Another cool thing with foresters, it's gonna be really good news for you because you dip. All right. Like I said earlier, we can actually get you the non-smoker rate because you don't smoke cigarettes. You
Yeah.
only do dip, right? You don't smoke
No,
cigarettes. right?
smoking's bad for you.
Yeah. Yep. So we can actually get you the non-tobacco rate on the policy, which is actually pretty cool. All right. So that's yours. You can actually hold on to that. Okay. All right. So obviously budget's number one for you guys, right?
Yeah.
You guys are like, all right, how much is this going to cost, right? All right. So I'm going to go through this real quick to find out what I can qualify you for, or show that how much it's going to cost.
Okay.
So we got Logan here, Kelsey here. Okay. All right. So with you having the $50,000 of life insurance already, and you guys owe $125, do you guys have any other debt outside of the mortgage? Do you have a car payment?
Just the 2 vehicles, that's about it.
So you do. How much debt do you have?
Total for both,
Mine's just about paid off. There's only like $3,000 or $4,000 left on it.
Got it. Okay.
and my car is about $40,000.
You have $40,000 left. Got it.
Well, paid down, so yeah, probably like 30.
30. Okay. Got it. Okay. So you actually have about, if I do the math correctly, $155,000 of debt right now. Mainly what we're trying to cover is the mortgage. But if I can find something that covers all your debt, would you guys be interested in looking at that too?
Yeah, of course.
Absolutely.
Okay. And then also with this $50,000 of coverage with the other insurance carrier, I'm not telling you to replace it, but with that you have a tobacco rate. With this new company, we can get you a non-tobacco rate. So if we can group all that together to have something to pay the mortgage off and the debt, and then also cover a year's salary, we can look at that too. Okay. So kind of what I came up with here is, so for you, Logan, we can actually get you $100,000, lock it in for 30 years, and it's only $65.45 a month. $125,000, which is something that's going to cover the whole mortgage and not worry about anything else. You can keep your current insurance with the other company. That would only be $80. That's locked in for 30 years as well. And if we cover the mortgage and the other insurance policy, that comes to about $175. That's only about $110. Right now, you're paying $40 for just $50,000. Okay, and do you know how long the term is on that current policy?
I believe it's like a 20-year term.
Okay, so you have 15 years left. Got it. So we could rewrite everything for about $100, $110.60. And if we look at you, Kelsey, we could actually get you a $100,000 30-year policy as well for $43, right? $125,000, which would cover the whole mortgage. It's only $53. And then if you want to get more coverage, we're looking $175,000, $72.17. So what do you guys think? Which one makes the most sense so we can see if we can get you approved?
Probably the 175.
Yeah, I think the 175 to take care of
Everything.
everything, the debt, the mortgage, provide,
So that one would cover the mortgage and then also the 50,000. It doesn't cover the debt. So if we want to add in some extra coverage, we're probably looking at about 125 a month.
Okay.
I got to run the quote, but so let's look at this one. So that one makes the most sense for Logan.
Definitely.
And then, like we said earlier, we don't have to cover the whole mortgage on you. My job is to find the best option for you. This one's with Foresters. This one is with another one of our carriers, Government Personal Mutual, which only we offer with my agency. Only we can cover people with this insurance company. They actually built the product for us. So my job is to find the best option for you, right?
Okay.
GPM was actually started by an Army colonel back in the 1930s. And so they used to only insure active military and government personnel, right? So you can see the pricing's a little bit different. It's a little bit cheaper because you're a female. But also, if I put you with Foresters, it would probably be around $50. So I'm saving you about $7 there.
Okay.
All right. So do you guys think it makes sense to cover the whole mortgage for Kelsey? Because I mean, the price difference not that much. What do you guys think?
Yeah, I was honestly thinking the 125 for me, since you have more of an income than I do.
Yeah.
Okay. So we're looking at. All right. So can you write that down for me?
Sure.
110, 72.
1072.
Can you add that up for me?
That's 182.
182.
53.
Yeah, 53.
Yeah.
Okay. It'll be 163.
Another thing I wanted to show you was with Foresters, like I said earlier about getting the kids covered, we can actually get you guys, it goes up to 75,000 and it starts at 5,000 to 75,000. So we can actually get your, so Charles, he's the 5-year-old?
Yes.
Okay. And Charlotte, right? Okay. So if we could get Charlotte 20,000 of coverage for, it's only like $6.47, and then we can get Charles the same, because they're actually in the same bracket, okay? $6.47. So basically another $13 added to this 163. Looking at about 175 for all 4 of you guys to have protection, and they can actually increase this 5 times in a lifetime. Does that make sense for you guys too? So that way we, something for them as well.
I think
Those
that's
a
a good
little cash
idea.
value?
Yeah, I think that's a good idea.
So you can actually go up higher, so we can actually do 30, 40,000, but, start with 20 and then increase later. Does that
Yeah.
sound good?
Yeah,
Yeah.
20 is good for now.
Okay, so are you guys able to grab your driver's license?
Sure.
Perfect, all right. So that's how it works with the in-home guys, and, so I want to do another scenario with an older couple, okay? And let me just check something real quick here.
You're good, you got 15 minutes.
15 minutes, okay. So I'm going to kind of back up and let's see. This is going to be more of an equity protector, okay? So Logan, it shows here. All right. Yeah. It shows here that you're 71 years old.
Yes.
Okay. Kelsey, you're 68?
Yes.
Perfect. Okay. So Logan, have you ever had a heart attack, stroke,
I
cancer?
had a heart attack 2 years ago.
Okay, that's no problem. So that was, has it been over 24 months?
Yeah.
Just over, yes.
Okay, perfect. All right. So, heart attack. So that was 2020. 2 years ago. Got it. So what do you, as far as your prescriptions, you have to take like a blood thinner for that?
Yeah.
Yeah, okay. Oh yeah, I see it right here, okay. And then you also have diabetes as well?
Yes.
Okay. Got it. And and I see blood pressure, cholesterol. Do you have to take anything for, like asthma, anything like that?
No asthma.
Okay. So just a heart attack, diabetes, blood pressure, cholesterol?
Yeah, it sounds about right.
Okay. And your, what's your height and weight ballpark?
About 6 foot, 220, 230.
Okay. And any tobacco use?
No.
No, okay. Perfect, that saves you a lot of money. All right, so Kelsey, do you have any tobacco use?
No.
No. And what would you say ballpark is your height and weight?
About 5'5", 130.
Okay, got it. All right, so just the heart, no stroke, cancer, anything like that?
No.
No, okay. All right, so you guys owe, on this paperwork here, it shows that you owe about $125,000. So most people that send this form in, guys, are looking for something that's gonna pay the mortgage off. With you guys owing $125,000 and being 70 years old, it doesn't always make sense to cover the whole mortgage. My dad actually just turned 70, and we got him a policy that's gonna help my mom pay the mortgage for 2 years, because they have over $100,000 of equity. So mortgage protection doesn't mean mortgage payoff. It means protect the mortgage, protect the equity. So if you guys owe $125,000, and the house is worth, I've just pulled it up on Zillow, it's $200,000. Is that about ballpark, right?
Yeah,
Yeah, that sounds about right.
So you have $75,000 of equity. That's solid. So the last thing you want is, God forbid, Logan passes away and you don't have a policy to help, pay the mortgage. You don't want that equity to go back to the bank, right? So what do you guys pay monthly for the mortgage payment?
About
$1,000.
1,000, okay. And Logan, so you guys have, okay, all right. Do you have any life insurance that's not through like retirement or work?
I don't have anything.
Not currently on me now.
No? So that's another reason why you sent the form in?
Yeah, because once I retired, I lost the work benefits I had.
Wow, okay. So you have no coverage?
Nothing.
Okay. Have you tried to apply recently and been declined?
No, we
No.
haven't tried for anything.
Okay. So you guys obviously see there's a big problem here, right?
Yeah.
Yeah, okay. Got it. So my job is basically to find out, like I said earlier, to find out what I can qualify you for. Good thing is you are still insurable, right? So we got, we don't have to find a product that's gonna have a 2-year wait, day one coverage, okay? So as far as like driving record, anything like that, any issues there with that?
No.
No. So that's clean. Got it. And Logan, you make, for your retirement, what would you say you get Social Security?
Yeah.
Okay. What's your Social Security?
$1,500 a month.
And do you have a pension?
Yeah, I'm making about $2,000 a month off the pension.
Got it. Any other income? So 3,500?
Yeah.
If he dies tomorrow, that pension's gone, right?
Yeah, I don't
Yeah.
have anything on it.
Okay. So you would, okay, let me find out what your income is. What's yours?
Mine is about 1,000 from social.
Social Security? Any other income?
I do not have any other income.
Do you guys know how Social Security works?
Not really.
Okay, so if Logan passes away tomorrow, God forbid, you're gonna lose your Social Security because his is higher, so you're gonna take his, right? So we're minus 1,000 there for yours. And then the pension, what happens to the pension?
It's just gone.
Goes away. So then we're minus another 2,000. Right now, your income is 4,500 between the both of you. It's gonna go down to 1,500. You're gonna have $500 left to pay the mortgage. So what's your plan?
I'm gonna have to sell the house and maybe move in with my daughter.
Okay. Where does she live?
She lives in Rehoboth.
Okay, so not
too far. Yeah, not too far, but taking care of everything, and that's a lot.
Got it. So this right here, guys, this 75,000 of equity, that's what we're protecting today. If he passes away, we need to find something that's gonna, we don't know what the market's gonna do. Right now, it's hot. houses are selling in a month. But, 3 years ago, houses were on the market for 6 months, 10 months. So we need to find something that's gonna be comfortable, but also buy you time, so that way you can make the mortgage payments every month. We could also put that into some sort of money market account and just pull money from it, and it's gonna continue to grow, right? Does that make sense?
Definitely.
So we're not gonna cover the whole mortgage today, but we're gonna get something to protect this equity,
Okay.
because you're in trouble if something happens. We want this equity to go to you and not the bank.
Right.
All right, so this is what I came up with for you, Logan. I just ran a couple numbers. All right, so we can cover, with you guys owing $1,000, you have to pay that every single month to the bank or they're gonna foreclose. We can get you 9 months of mortgage payments. So if Logan passes away tomorrow, the insurance company is gonna issue a check for $9,000, which would help you pay the mortgage for 9 months, right? Does that make sense?
Yeah.
And that's only $69.68. 12 mortgage payments, $91.64. 18 months, about a year and a half, $135. That's just on Logan, okay? With you not having any coverage, do you guys have any, is your funeral, all that stuff taken care of?
That is
Yeah,
paid for.
that is
Yeah.
taken care of.
Okay.
Funeral plots, everything.
So what would be your plan, Logan? I mean, would you still want to live in the house if Kelsey passed away?
Probably not, no.
So we need to find something like to buy you time too, right? Because if something happens to Kelsey, your income is gonna go from, your income is gonna go from, let me try to figure it out the other way. So you're gonna lose her 1,000. So you're gonna go from 4,500 to 3,500, right? And you're not really gonna wanna stay in the house if she's gone?
No.
Yeah. So what would you do?
I'd go probably with our son.
Yeah, okay, all right. So we can find something similar, 9 mortgage payments on Kelsey, $52 a month. 12 mortgage payments would be 68, 18 mortgage payments would be 100, because I know you told me that you recently had a stroke, you know, so we can't get you something to pay the whole mortgage off either, right?
Right.
So, based on, obviously we know something makes sense, right? We gotta do something, because both of you guys would be in trouble if something happened to either one of you.
Yeah.
Do you both agree with that? So from a budget standpoint, which one do you think makes the most sense to get? Obviously, we need to make sure we get Logan covered, because you're in trouble.
Yeah, definitely.
Which one makes the most sense for Logan?
What do you think, the 12 or the 18?
Yeah, one of those gets you at least something.
Some time, for Logan. 12 or the 18? I think we should do the 18.
About 135 a month, okay.
Yeah, I'm gonna need some time.
Because things come up, you know, other things come up besides just the mortgage payment.
Yeah.
All right. So 135, 56 a month, okay. Do you think it makes sense to get anything on you?
I think we got anything, probably just the 9, because you're still gonna have your income, you know, so you'll be okay financially, but gives it a little bit of time.
Right. Makes things a little easier.
Okay. So can you grab a pen? So can you write down the 135, 56, and then the 50, you said this one makes the most sense?
Yeah.
Okay, 52, 34. Can you add those up for me?
Just,
So,
Yeah.
187?
yeah, that's right. Yeah.
Okay. You guys have any, like, about 187 for both of you guys to be protected? You guys have any grandkids?
We-
Not yet.
No?
We'll give it two, 3 more months, we will.
Yeah, okay.
Soon.
Cool, okay. Well, so one's on the way?
Yeah.
Sweet, all right. So I'm gonna leave my number with you, because one of our carriers has really good pricing for, to get your grandchildren covered, which is really cool because they can actually increase their coverage 5 times in their lifetime without proven insurability.
Okay.
And, you know, to get the baby covered, I mean, probably like $5 for 20,000 whole life. And they could increase it 5 times in their lifetime
That's not bad.
without proven
That's not
insurability.
cool.
Yeah, okay.
Okay.
All right, so we got 135 and 52, that makes the most sense.
Yeah.
So I want to make sure that fits into your budget, right? So 187, and you guys make about 4,500 a month. So that's really not going to mess too much with your budget, because the last thing I want is we apply, you get approved, and then you guys cancel after a couple months.
I mean, we don't have any other debt,
Okay.
just the house.
Because this is probably the most important bill that you need to pay, because if something happens to Logan and you don't have that 18,000, then it's gonna be tough for you to pay the mortgage payment. And the main goal, every time that comes out of your checking account, you're thinking about that equity in the house. So this 75,000 equity is basically your life insurance.
Yeah, it definitely needs
This-
to be protected.
This, on paper, obviously only looks like 18,000, but it's gonna cover this, protect this 75,000 equity, okay? So you guys able to grab your driver's license so I can start, submit the application? And that's it, guys.